Hey everyone, George here. So today what I want to talk about is I really like this strategy a lot. I think almost everybody who has kids can do this. A little insider info. I was actually recording, this is my eighth episode now. So I was recording halfway in and this prior material I had that I was kind of working through, I just didn't feel that good about it. It kind of just sucked. Like it wasn't anything that substantive. I'll probably get around to doing an episode one day. I just wasn't feeling it. And your time is valuable, my time is valuable, it's not worth it. So I really like to cut to the chase with the things that you can implement like tomorrow and that can make a difference to your business tomorrow. And this is one of them. So hiring your kids. This is straight from the IRS playbook. It's totally legal, but you got to do it right. So in this episode, I'm going to cover how the IRS allows you to hire your kids, what you got to do to structure it the right way, how much you can save, and common mistakes and pitfalls to avoid. So without further ado, let's get started on this. Okay, so the hire your kids tax strategy is pretty simple. The idea is you pay your children, each child, at the standard deduction for that given year, $15,750 for 2025 or less, and you take that as a deduction from your income, and technically you would include it as income in your children's return, and you would have to file a kiddie tax return. However, if they are at the standard deduction or less, then they would pay no income tax on that amount. Now, if you are a sole proprietor or a husband-wife partnership, then you would save not just on the income tax, but also on the FICA tax, which is the Social Security, Medicare, and FUTA. Now, the Social Security, Medicare, and FUTA for your own run business runs upward of 7.65 times 2, so 15.3%. So that would amount to a pretty hefty tax savings, like between everything, between federal, California, and the self-employment, that can be easily upward of 40% marginal tax savings. So that would be very beneficial as a sole proprietor or husband-wife partnership. Now, as an actual construction owner business, I hope you're not operating as a sole proprietor because your audit risk will be much higher. When you're in the bucket of a sole proprietorship, once you hit seven figure, which should be fairly quick for you as a construction business owner, you are now the larger fish in that sea, and your chances of an audit are not low. I have out of the hundreds of construction owner clients I have one that had a seven-figure Schedule C, and sure enough, he got audited in the last 5 years. So please do not, if you do have a construction business, I know we went off on a little tangent here, please incorporate it. However, if you are a husband-wife partnership, and there's advantages to that, then you still would get off on the FICA tax. So moving on, you can be an S corp, a C corp, a multi-member LLC, what have you. However, unfortunately, we would still be on the hook for the FICA, for the payroll tax. Though you still get an income tax deduction for that amount. So it is still a nice spread. If your effective tax rate between everything was 35% and you now shifted via this strategy to your children this income to their standard deduction or less, you still have a spread of 20% marginal tax savings, which is not little. Now, just to do some quick and dirty math on this, if you had 3 children, pay them each $15,750 in 2025 times 3, that's a tax savings of $47,250 in that year. And again, if it's a sole proprietorship or a husband-wife partnership, then that's $47,250 of not just income tax, also FICA tax. And if you are an S corp or a C corp, you still unfortunately do pay the FICA tax. However, you still get the income tax deduction, which is still big. Now, there are four requirements that you need to hit in order for this to become a valid tax strategy. And I'm going to put them down in the corner down here, and let's talk about them one by one. So number one, your kids must actually do the work and it must be real and age appropriate. Like cleaning the office, filing things, social media maybe. They could be models in your pamphlet, your advertising ad campaign pamphlet. You could take a family picture, put it on the website in the About Us section. They can help on the job sites. They can hand you tools. They can help around the house, like organize things, or I'm saying house, but yeah, you could have a home office or your actual warehouse or wherever. There must be actual work done. It must be age appropriate. I've had people off the cuff, hire their 1-year-old, and then we'll get notice from the Social Security Administration asking why we're hiring a 1-year-old. There could be valid reasons. You could take a family photo. You could pay them for their modeling. You could put it on your website in the pamphlets, hand it out for advertising, promotional. There could be valid reasons. However, anything under the age of 2, 3, I would, just to avoid any red flags, I would strongly advise against it. The bottom line is your kids actually do need to do the work. There needs to be some sort of work done, and there needs to be some records to prove that. Number 2, you need to pay a reasonable wage. You can't go paying your 7-year-old like $100 an hour to hand you a hammer. It needs to be something within market range. You can look it up. You can see on comparable websites if you were to hire somebody, what it would go for, like modeling or a photo shoot or something like that. So it needs to be some sort of reasonable wage. Number 3, you need to pay it through a payroll processor. I can't stress this enough. I've had so many clients just Zelle a family member or somebody something and say, oh, I payrolled them. I'm like, no, you didn't payroll them. You just transferred money to them, which is entirely different. Like, you need to actually pay them through ideally a payroll processor and, report that as wages, subject to FICA, all that. And the payroll processor, and I say payroll processor because when you use Gusto and you use ADP, which is a little pricier, or these like payroll processors, they automatically do the payroll tax filings for you. They do the W-2 tax filings for you. Theoretically, you could transfer money and report it on a 941, 940 W-2, W-3, but that's going to be a lot more manual. So I would highly, highly recommend you just run this payroll through a payroll processor along with your other crew members and everybody else. And number 4, you need to keep documentation. This is job descriptions, pay stubs, which you would have if you're on a payroll processor. Bank statements obviously supporting what they do. This is like pretty easy stuff, but you need to make sure that there is some sort of documentation to substantiate their work. It wasn't just like a Zelle transfer and we called it a day, we call it a strategy. It won't work that way. So again, just to make full circle recap, your kids must actually do some work, and whatever that is, it needs to be age appropriate, cleaning the office, filing, social media, advertising, on-site helper. The pay must be reasonable. You need to pay it through a payroll processor, or basically just have it filed as actual payroll. And you need to keep documentation on all this. So once you fulfill these 4 criteria, this becomes a very valid strategy, very useful. I have my clients, to the extent possible, do this. So what do you want to avoid getting flagged? So let me put those criteria down here. So you don't want to pay your kids cash under the table. That definitely sets off like a red flag in terms of if you're ever to be like audited or anything like that. And always your tax return, payroll tax expense and payroll expense and payroll tax expense needs to tie to pretty much your 940 or 941s. If there's ever a discrepancy, it kind of potentially would lead to a red flag. So if we're claiming payroll and we paid our kids cash, that cash wasn't reported, this kind of becomes an issue. So number 2, failing to keep proof of the work. So again, you need to actually keep some documentation as to what was the work involved. My biggest recommendation to you is like the easiest way to go off of this is take a family photo, put it on your website in the About Us section if you feel comfortable doing that. It makes you more relatable. A lot of people do this, and it shows proof that there was work. Like IRS auditors are people just like us, and they'll go snoop your website and see your presence and this and that, and things like that. If it passes the smell test on the back end, you'll save yourself a lot of work. Overpaying for simple tasks, that's another red flag. You don't want to go paying $15,000 for one day of work or anything like that. Not filing W-2s or keeping payroll. Again, so as long as you run it through a payroll processor, as long as your tax return is filed correctly, things tie out between payroll and your income tax return, all that, it should be good. None of these red flags should be any issue. In terms of what you could do, what I see is a lot of my clients will pay their children in this way, and then so it kind of teaches their children work ethic, money management, responsibilities. It's definitely like a very positive thing in your family, like having them kind of like earn their money and therefore go buy clothes. They can save up for college, put it in a Roth plan, which would grow like tax-free pretty much for their whole life. And it's a very useful tool, very useful strategy. And all you're really doing is shifting money from one income tax bracket in the family to the other. So this is a strategy I highly recommend. If you don't have your payroll set up already, you can work with a CPA. You can possibly do it yourself. Just make sure you do it all correctly, and throw your kids on there and take the tax break for it. Just make sure it all gets done right. Anyways, I hope you found this helpful. Hit like, subscribe, turn on notifications for any updates, and I hope to see you in the next one.